Hi there, welcome to Grain TV. I'm Kevin McNew. It is Tuesday, March 14th, and another defensive day in the markets. Let's take a look at GrainEdge's trading platform and see how we closed out the trade session. Another day with grains under pressure. At the 8:30 bell, beans were the leader to the downside, trading as low as $9.92 on front month May. Corn, on the other hand, managed to stay in positive territory thanks to some reasonably good export news. By the end of the day, soybeans had fought their way back to the $10 mark, and a late session rally in both corn, beans, and wheat seemed to show very anemic buying at the end. On the close, corn was up 1 1/4, beans off 6 3/4, while Chicago wheat was unchanged. Welcome back. Let's take a look at some of the news that was driving the market today. First of all, in corn, there was some interest on the demand side. South Korea manufacturers were in the market for a sizable chunk of corn, two different groups buying a total of 266,000 metric tons of optional origin corn. But closer to home in the U.S., we did get USDA flash sales, 120,000 metric ton deal done with Mexico. But the real big news of the day was a rumor about China that started on Bloomberg, where they were saying China was in the market for 500 to 700,000 metric tons of U.S. corn. By the end of the trade session, Reuters had confirmed at least 3 loads, or 195,000 metric tons of corn, was coming out of the PNW to China. So that was certainly supportive and a surprise that sort of kept the corn market afloat while beans was on the downside. Other news out today, the weather in South America continues to be favorable. Brazil continues to see harvest progress move along. Argentina's getting rain where it needs it. The Brazilian real was weaker again today. That continues to have traders believing that Brazilian farmers will start to be more aggressive in moving beans into the world market. Tomorrow we will get NOPA crush numbers. Those are the numbers for February. Analysts are looking for 146.1 million bushels versus last year's February number, 146.2. So watch for those mid-trade tomorrow in the session. Let's talk about what is going on in the hard red winter wheat country. Yesterday, after the close, we did get some hard red winter wheat reports from various key states, Oklahoma, Kansas, and Texas. Let's take a look and dive into these numbers. First of all, when we compare last year's numbers to this year's numbers, the far right being last year versus this year, as you can see, the percent of the crop good to excellent is substantially lower than it was this time last year. Kansas, 56% last year, 40% this year, 67% in Oklahoma last year, 42% this year. So those are big, dramatic differences in the crop condition as we enter sort of the development stage. The crop is coming out of dormancy, and we're starting to see problems with the crop and very little moisture able to sort of sustain that crop. Keep in mind, last year was a phenomenal yield in these states because of the ideal rainfall they got. So there's still time for them to get rainfall, but it seems as the calendar keeps moving forward, it's been very hot, and now, of course, with the cold patch in the plains areas, it's getting some cold damage potential. So the crop to hit a very high yield like we did last year seems very unlikely. But the real question will be, what is planted acres for all wheat when we get the March 31st report? Speaking of that, let's take a look at some of what analysts are saying about that March 31st report. Let's take a look. First of all, Informa yesterday came out with their numbers. Allendale, another private forecaster, came out with their numbers. Both numbers seem to line up pretty well with each other. Corn looking to be about 4 million acres lighter than last year. Beans about 5 million acres more than last year. And wheat somewhere in the 4 to 4.5 million acres lower. So that's what we have from two key analysts. We'll have more analysts that are coming down the pipe as we get closer to that March 31st, but certainly everyone will be watching that with bated breath when we get it at the end of this month. Let's take a look at the long-term charts here on Beast Corn, the daily chart. We've been talking about this for a while. We traded that double top at 404 and we broke through the underlying support at 388. We called for 376 as sort of the downside potential, but today's action was somewhat supportive if you're looking for a recovery. We've had a steep slide here in the last 2 weeks, but today's touch of 381, which was the low established back on January 12th, you can see that we pushed out of that today. So we traded down to that 381, but we made a nice move higher, largely driven by this positive export news. So that was certainly supportive and maybe signs that we're in for some sort of corrective phase here after the 2-week slide. Looking at beans, we also have a similar action, this time going back to the low on May beans set in November, down around 991. So you can see we bounced down to that 991 and we bounced up to it, trying to close around $10 on the close today. It was a key battleground as we went into the last few minutes of trade. But overall, I think this will probably be a corrective move to the upside, not looking for any sort of major major recovery, because everything is sort of in a tailspin, not only grains but crude oil, the CRB index, everything is sort of moving down. And so I think we were probably more in line with more downside pressure as we move forward. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, including lowering your commission to only $7 a side, visit us online at grainhedge.com. Have a great day. We'll talk to you on Wednesday.